Welcome to the Mortgage Broker Podcast, tailor-made for Canadian mortgage industry professionals. Proudly presented by a Better Way Mortgage Group, this podcast is your trusted source for insider insights, market updates, and strategies to elevate your career in the ever-evolving world of mortgage brokering. Whether you're a seasoned broker with a Better Way Mortgage Group or an industry enthusiast looking to stay ahead, our episodes are designed to empower you with the knowledge and tools you need to excel in the Canadian mortgage space. Okay, we're back for another episode of the Mortgage Broker Podcast. And again, we're continuing with our perfect loan process series. We're trying to wrap this up as quick as we can because we do have a really fantastic, actually, resource for everyone to be able to log into a page with the specific resources that we've touched on in every episode. A quick link to a video and audio files for each of these episodes that follow the PLP series. That's important, I thought, to be able to deliver to our brokers and just our listeners that are wanting to, jump into this series and actually make some changes in their business and implement this immediately. Having a course, so to speak, to be able to jump in and do that, I think is going to be very important. And that's why we've been building this. We're going to launch the entire resource to everyone once we've completed our last session of the Perfect Loan Process series. So this is session 5. There will be 2 more to follow after this. Diving right in, today we are jumping into the planning and strategy session of the Perfect Loan Process. Again, this is a continuation of the series that we've been touching on, going back to episode 9 where we introduced the PLP. And again, for those of you that haven't listened, I would definitely go back to that episode and listen to these in order so this does make sense to you. That was the Perfect Loan Process that Derek and I implemented with Thrive Mortgage Co. Many years ago, and again, we've refined it all along. And what we're explaining to you today is the most polished version of it in our sense. And this continued in episode 13 and 14, where we covered the lead consultation process, and then again in episode 14, the document collection and pre-review process. Last episode 16. Was the review stage, where we touched on the review summary and the strategy of the deal journey, which leads us to today's session, the planning and strategy session, which involves the mortgage advisor and the client. This is a critical part of the journey because this is where the client is getting, the real important advice and strategy that they need in order to move forward, whether it's a pre-approval to purchase a home or a refinance or a renewal. That is our main content for today. Today's hosts are just myself and Derek. Jason can't join us today. So jumping right in, the planning session or the planning and strategy session comes right after the loan specialist has completed that review summary that we touched on last episode. We're now utilizing that to have this advisory call or meeting with the client. Typically, this would be conducted in our process via Zoom. A lot of brokers that we know do prefer to do this in person, or some do it over the phone and share the material ahead of time. But this is really a one-on-one or a one-on, 2 or however many clients are involved in the application. All clients should be involved in this meeting. We make that a requirement. So if there's a husband and wife, or a husband and wife and a co-signer or what have you, we want to make sure all borrowers are available for this meeting, because this is where we're going through the critical data and information on their qualification. So what happens there is we take that review summary template that we again went through in the last episode, and our associate mortgage advisor, which we touched on last episode as well, is booking this call for us and taking pretty much that entire summary out, other than the qualifications section of that summary, and sending it to the client to ensure that all those details are accurate. And booking that call for the mortgage advisor in the calendar. So the mortgage advisor is essentially showing up to this meeting. They have, had some time to prepare and look over the file, look over the summary, make sure everything looks tight and right for the situation, and then delivering that advice and strategy based on what was outlined as possible in that review summary. What is that planning and strategy session? Like, what does it actually look like? Like, other than, the fact that we know we got this summary, we know we're talking about options, like, how is that actually going to go forward? And again, there's going to always be those 2 scenarios that are slightly different, whether we're pre-approving to purchase a home or looking to refinance or renew, which would follow a bit of a different track. But maybe that's where you can jump in right there, Derek, is just what is the planning session and what does that look like?
Yeah, so like Dean mentioned, the kind of core purpose of this, and there's different ways to do this, right? You can send an email over and ask clients to review it, but as we all know, there's a lot going on in a mortgage application. There's a lot of minutia and detail that clients aren't aware of how it's going to impact their qualification. I think that this is the most important part of the process from a client and qualification perspective, because you're literally going to be giving them a great green light on something after this meeting, or you're going to be taking it back and revising the scenario again. So, like Dean mentioned, it's best to have everyone on the call, everyone that's involved, so that there's no miscommunications. But yeah, the goal of this session is to go through everything, all the information that you have in their application, all the documents that have been reviewed, to triple check with them, make sure everything's correct. Again, you got to cross your T's and dot your I's in this industry. If you don't do that, there's far too much room for error. So, these calls don't need to be really, really long. When we were, running a lot of business, we had these at 30 minutes, and oftentimes they wouldn't even take that long. It really depends on the client and the situation, how many questions they have. But I think controlling the conversation is really important. So, just leading into it, as soon as you get on the call or Zoom or meeting, letting them know what you're going to be going through, take control of the meeting, and you're going to touch on, okay, first of all, guys, we're here to go through all of your information, your qualification, where we're landing from a rate and lender and product option perspective. And then from there, we're going to talk about next steps, whether we're pre-approving, we're submitting a refinance, or potentially we're submitting a live purchase if you have one. So again, starting at the top, and some of this might be repetitive, but I think repetition is important. So just touching on the first, and in my opinion, one of the most important parts of an application, your income, right? So you actually get them to pull up that review summary on their side, walk them through their income, make sure that it's all correct. The next piece is credit, which you're going to touch on, right? So you're going to go through their credit scores, explain to them what that means, talk about any of their liabilities. Again, like we touched on in the last episode, oftentimes people have a credit card that's showing as a $5,000 balance, but they paid it off, right? And if you look at the template that we're sharing, there's context and all that to let clients know. Don't stress the balances, but if they're wrong, let us know. And as you're talking through this, I always found it was important to let people know, if we issue a pre-approval today or even submit for an approval, if any of this changes prior to completion, we need to know, right? Especially if you're pre-approved and you're still shopping for a home, your broker needs to know if you've changed your income, if you financed a vehicle, or it could be positive, like maybe their income went up or maybe their credit liabilities went down. So just tell people, this is a summary as of today. We're going to be issuing your pre-approval. Let's call it that. As of today. If anything changes going forward, definitely keep us posted, because we'll want to update your application accordingly. So again, you're talking through income. If you notice that people have kids, but they don't have CCB income is listed, you're going to want to triple check that with them. A lot of times when you get to that review process and the underwriter is actually digging through the file, they might have a great 2-year average, but their year-to-date is trending low. So this is where you would be asking them, why is your year-to-date low? And hopefully there's some rationale behind it, or maybe something from a negative perspective has changed and you're not going to be able to use that income. And in that scenario, you actually have to go back and do another review, right, to see what level of income you're going to be able to use in the application. So again, credit and debts is a big one. Assets, I've always found that people don't tend to put all of their assets in there for whatever reason. They don't add RESPs, they don't add RRSPs. Let them know, like, full disclosure, they need to put everything in there. It's going to do nothing but benefit their application. Lenders like to see assets and net worth, even if you're not using it in the application, right? Lenders like to see that there's some fallback if you need an exception on ratios or whatnot. So again, go through the assets, make sure that's all correct. And then the next piece would be down payment, obviously only for a purchase scenario. So it's really easy in that first lead call. If you revert back to that episode, how much is your down payment? Where's it coming from? People go 200,000, and it's going to be gift and savings. Okay, well at that point, we don't know how much is gift and how much is savings, and there's no gift in the application. So in that exact scenario, we need to dig in a little bit further, right? Like, hey, do you guys have confirmation of where's the gift coming from and how much is it? First of all, when are you going to get it? Is it going to be a last minute thing, or can you get it in advance? And then if they say, yeah, okay, the rest is coming from savings, we need to dig in and say, okay, guys, you have 8 savings accounts here. Which ones are you planning on drawing funds from? If they're in an RSP or TFSA or any type of an investment, we need to make sure that they are aware that they can pull that money out into a personal account for their lawyer well in advance, because some of the online type banks can take a little bit longer to actually have funds move. So just going really into detail on all this. And another piece from down payment, we're going to talk about deposits. If someone's selling a home and buying and we notice they have no assets, we should be talking about that. Do you guys have access to line of credit or family money, or do we need to do a deposit loan? Because we have to do a deposit loan. That's something that you don't want to drop on someone last minute because there's costs involved. So if you can get ahead of this, it's really just setting up, that live transaction, that accepted offer for success. And there's going to be limited questions, and, it's going to make everyone's life a lot easier. So now that we're through, assets and down payment, we start talking about the property, right? So if they have an existing property that's being converted to a rental, maybe they're going to refinance it, maybe they're selling it. You want to talk through all those details to make sure all the information is correct. A lot of times, borrowers will upload an old rental agreement because they don't have a new one. So we want to make sure that that's current, that the rent's current. Have they increased it yearly like you can in BC anyways? So those are really, the specifics. And then you're digging into qualification, which is really what the clients are there to hear, right? Like all of the rest of that, you got to keep in mind, these borrowers are probably not super eager to talk about it. They've done an app, they've sent in docs, they've seen an email. Now we're talking about it, but that's really finalizing everything, which leads to qualification. So if you're in a position where everything that you guys have talked about is correct, or sometimes you're going to have, your velocity open and you're updating things as you go, then you're going to dig into qualification, right? So, you're qualified for $1 million purchase with 20% down, with rental income, without rental income. So, you dig into where they're landing. And I think a good question to always ask a client, hey, is this kind of what you were expecting? Which, if you did that lead call properly, you should have an expectation of what type of a purchase price they were hoping for. So this planning meeting is always going to be good or bad, right? If they qualify for what they want or more, they're happy. You're probably moving forward with a pre-approval. You have a conversation about rates and lenders. If they're not, the conversation is a lot different, because now, we're going to work backwards and say, hey, you know what? You guys are only landing at 800. I know you're expecting $1 million. What are our options to get there, right? And then you're leading into, do you guys have co-signers? Do you have the ability to get a gift? All these different avenues that you can go through to make sure that you haven't missed anything. I think that's really, really key and important in all this, because if you forget to ask if they have a co-signer, you forget to ask, hey, do you guys have someone that you could get a gift from to increase your buying power? Are you guys open to a property with a suite to increase your buying power? If you're not asking those questions and the next broker or bank does, they're very likely to win that deal and take it away from you because they've found a solution that you didn't. So make sure you exhaust all options on those calls. And I think it's fair to say, hey, I don't know your family situation, but this is what we see other clients doing. And you know what? We live in a market where houses are expensive, and maybe rates are high at that point. Qualification's tough. So don't make people feel bad about it. But at the end of the day, like, that's the current situation, and what can we do to help them improve it, right? Another piece is paying off debt, right? I think a key one there is maybe someone has 30% down, but they have a couple car loans. Maybe we look at doing 20% down, but paying off the vehicle loans just to free up cash flow and improve qualification. So, assuming you've gotten through all that, qualification looks good and your clients are happy, you're going a couple different directions now, right? If it's a live deal that you're submitting, whether it's a refinance, maybe a pre-sale, maybe they just have an accepted offer and they remove subjects and their bank dropped the ball. At that point, you're talking about rates and products, the current market, filling them in on what other clients are doing. I think really understanding their situation, what's important to them. Do they like the consistency of fixed? If they do, are they more comfortable with something short term because of the rate environment? Are they a bit of a gambler and affordability is not as much of a concern, maybe variables to play. So really just walking them through. Keep in mind, like, we as mortgage brokers are not telling clients what to do. We're explaining the options to them so that they understand and they can make their own decision. And I think it's important to tell clients that as well. Like, I'm here to advise you on what's available, how it functions, and what a lot of people are doing in today's market. You guys let us know what you want to do after we have this conversation, right? So again, a live deal, if you've gotten through all that, they want to go with a 2-year fixed with X bank, you're off to the races, you're submitting, you'll let them know you'll probably have an approval within a few days. And at that point, you'll be summarizing, which we have later episodes on. If it's a pre-approval, a lot of brokers send formal pre-approval letters with a summary and, confirmation of rate holds. Some don't do that. We've always thought that it was a good approach to outline everything for them and the real estate agent so they have something to refer back to always. And just keeping in mind and letting people know that the numbers are the numbers. Numbers can change, right? If you find something that's a little bit more expensive and you're in a conventional product, sometimes we can get exceptions. If you find a place that's more expensive, but it has more rental income, maybe we can make it work. So I think it's really important to let clients know that a pre-approval is a pre-approval, but when you guys start shopping and, if you see something that's a little bit out of range of what we've given you, we need to have a conversation, because there's a good chance potentially that we could make something work. And as we all know, clients seem to find a way to make things work in a lot of situations when they fall in love with a property. And sometimes it is a cosigner or, a gift to get them that extra 50,000 that they need. So pre-approval, next steps, you're issuing a pre-approval with rate holds. Some people go direct to lenders for pre-approval, some don't. And, I think the third scenario here is, what if qualification doesn't work and we're back to the drawing board? Or maybe it just straight up doesn't work and we know from this call it's not going to work right now. What are we doing with that client? So again, these are all going to be followed up on in later episodes of, what the action is, what tasks are hitting which team members, what stages are they going into so we can plan correct follow-ups. But yeah, I mean, in general, that's kind of a good summary of what the strategy session talks about. There's a few other things which I'll let Dean touch on, which are a little bit more strategy, and allowing clients to be aware of what options they have in the market.
I'll just recap on a few pieces and then add in where the CRM would function in this case. So again, I just want to preface, like, the CRM that we use to power this is Blue Mortgage, and it is built with a lot of automated tasks, automated text messaging, automated emails that are occurring throughout the whole journey, but especially at this time. There is a lot going on in, like, the pre-setup of the planning session, which is, the review summary, which we talked on the last episode, the emails that are going out to, communicate to the realtor and the client that those things are happening, this planning session getting booked, and then, of course, taking the planning session and actually conducting it and what's being used there. So you went through, buckets of items such as, the qualification, the credit, all those items that you just went through. Those are basically the buckets off of the review summary. So again, looking at that review summary, we have a template, and that's what the other piece I wanted to touch on. The template that we're following looks very similar to that. And that's the mortgage advisor that's following that template and filling in their own notes as they go through this call. So it's keeping the call organized and following a very consistent schedule or agenda of touching on those items and then getting to the qualification, talking on the strategy, talking about future investment plans, so on and so forth, and then completing or compiling their notes throughout that session. That's one of the pieces we're going to share today, is just what does that template look like? And again, you can change that or make it work for you. But that's very important from a CRM perspective, because that is going to be the planning session summary notes that get pasted into the CRM, which is crucial for the loan specialist or the underwriter who's going to jump back in and have to submit that deal or have to do a pre-approval certificate, do a rate hold, all those things that are part of our process. So they're only going to know what to do. That is now their roadmap to move forward, just as the review summary was a mortgage advisor's roadmap to move forward with this meeting. So these templates and this form of communication is crucial, because it's what allows us to not have to, call each other as teammates, text each other, wonder what's going on. Hey, what did this guy want to do? What did that guy want to do? It's all there as a very detailed communication template process going forward. So that's a big piece I wanted to touch on and highlight. Just that was what Derek was going through with those buckets. Some of the minutia that's occurring in the CRM is, we basically have two ways that this is going to go forward. It's going to be a pre-approval to purchase a home, or it's going to be a renewal refinance, which are going to follow, the renewal refinance is going to follow a very same track, which is different than a purchase. So in the event that this is a purchase, after completing this pre-approval, this planning session summary, pasting that into the notes, that's then the mortgage advisor would then push that file to pre-approved, essentially saying, hey, we pre-approved this client, now follow the next steps. And that stage is actually going to trigger the loan specialist or the underwriter to then go and submit a rate hold with a lender based on whatever strategy or whatever the notes say to do, and then also complete a pre-approval certificate. The pre-approval certificate is a semi-automated process in the CRM that will then distribute that pre-approval certificate based on whatever numbers we talked about to the realtor and to the borrower. So now they have a certificate, which for a lot of our clients heavily relied on, and our realtors very much expected those. And in our local market, it actually got to a point where the seller's realtor would receive that and know that, hey, that came from us, and also maybe have an experience working with us in the past, heavily relied on that to know that we did this extensive work and due diligence to get them there. So big piece of the process. And then the other side of that is if it was a refinance or renewal, you're still doing the same sort of planning session summary. Maybe obviously there's going to be some nuances based on submitting now and debts being paid out, so on and so forth. But that then frames up the live deal submission process, which will be our next session. So that's essentially what's happening. That's the purpose of the meeting. Those are the goals, is to ultimately get to that end goal of submission to a live deal or a rate hold.
I was just going to say, I mean, like we've kind of covered the basics of what you want to get out of this, which is great. Because again, I think a lot of people don't even go to this extent. If you really want to stand out as a mortgage broker and, try to provide as much value and opportunity as possible to your clients, you can start to work in, some strategic angles to this as well. We touched on talking about fixed versus variable, which is just the basics. Like we have to do that to help a client make that decision. We should also be talking about, if someone has the equity, are they interested in getting a line of credit product? Would that be something that would benefit them long term? If so, we should be going to a lender that offers a line of credit. We should make sure they qualify. We should tell them how it functions, right? I mean, in my opinion, for most people, unless you have a spending problem, getting a HELOC now is never a bad thing, because at some point in your life, you might want to use it. And if you don't have it, you're paying legals, you're going through an application and the whole document process, right? Talking about restrictive products versus non-restrictive and coaching them on the whole market to an extent, because you don't want to overwhelm people, but letting people know, like if you're super, super, super rate driven, there are programs and products that have better rates, but they're more restrictive and they can penalize you long term. Are people interested in pay down strategies? How can you pay down your mortgage quicker? And what does that look like? Right? Talking about prepayment privileges. And you can do some of this at different parts in the process, like prepayment strategies you can always talk about when it's a live deal as well, or closer to closing, just to not, kind of overdo the planning call. You could also openly ask people, maybe it's a first time buyer buying a condo, but are they interested in real estate investment? Are they open to buying a real estate investment property down the road? If so, just have a brief conversation on what that looks like and, what they can do to help themselves get there. Benefits between 25-year AM and 30-year AM, right? If you have that option, you're going to get a bit of a lower rate, typically on a 25-year. If you go to a 30-year, the payment's going to be lower, but you can always increase it later, right? Different types of lenders. We have banks and we have credit unions and we have mortgage finance companies and alternative lenders. And again, I think clients come to a broker because they want to understand options. And if you're a broker that's just talking about the very, very basic details, and for some reason they get introduced to someone else that's going to go in more depth, they might like that educational approach. And to be honest, that educational approach can benefit you in so many different ways. Not only are you doing a better job for the client, the borrower, but you can start to push these strategies through marketing, social media, whatnot. If you're actually talking about them and you understand them, these are all things to consider. I mean, penalties too, right? Like giving clients a detailed, basic understanding of penalties, between banks, credit unions, mortgage finance companies, fixed versus variable. That's something that needs to help them make their decision on what product and lender they want to go with. So I just wanted to add that in because, we covered the basics in the planning call, but as a broker, you should be educating your clients on the market that we work within so that they can make a better decision.
Yeah, exactly. And again, like as you flow through that summary or that and as a guide to your advisory session, each one of those topics, you're providing those educational components and how they're going to impact you based on those options that you just talked about, whether it's alt financing or AAA financing. So I guess the next step be just right before I touch on templates and scripts that are used, what's happening next? Now, these deal stages that we reference, these are the stages that are going to make sense on that PLP overview that we touched on in the first session or episode 9. Again, like making this your own, you don't have to be building a team exactly like we're explaining. And again, if you're looking at this as a one-man show, you might be wondering like, well, is this overkill to do this whole planning session summary? I don't think it would ever be overkill to do this planning session summary and have some very detailed notes, because it's just going to be your reference to come back. Like in a lot of cases, if you're not doing a rate hold and you're pre-approving this client and they don't end up buying, let's say for 3-4 months, this planning session, if you didn't make detailed notes like this, you're definitely going to forget the very important details that you noted. Or if you didn't, that's nowhere to reference. So I think it's very important to reference a very detailed note of this session. Again, for future reference, but also building the habits when you do add an employee to your flow, you have it there, right? So very important there, and what is happening next. So again, after this is completed, like I said, the summary template is pasted into the notes of the CRM. If we're pre-approved, we're going to the file review complete client waiting stage, which would be to what Derek mentioned, if they're just not able to move forward with the purchase right now, maybe having issues with the qualification amount, wanting to bring on a co-signer, wanting to change something, save more down payment. That's going to park it there for now. If it's pre-approved, we talked about what's going to occur there. They're going to get into the pre-approved stage, which is ultimately going to lead to the rate hold stage. With our group, we always did rate holds for all of our clients, unless it was a B or alternative type scenario. But if it was a AAA deal, we would do a rate hold on every single file. So it would follow that. And then the loan specialist would then change the stage to rate hold pre-approved. And then again, if it's a renewal or a refinance, we're going to live deal to be submitted, which that's where we'll start next session on. Or we would go back to that file review complete client waiting stage, which is a stage where we can park it for 30 days, wait for them to come back to us with their revisions, adding a co-signer, saving more money, what have you. Ultimately, if it sits there for more than 30 days or they just cannot move forward right now, we're going to move it to our on hold stage, which is also known as post RS hold cold expired. And what that tells us is any deal sitting in there, we know that it was on hold for a specific reason, and we've noted the reason in the note section of that of the CRM. We also know, because it's in that specific on hold stage, we know we've done a full review, we've done a full planning session on this deal. So which is important for us from a marketing call perspective, which we'll touch on from a post perfect loan process journey and again in future episodes. So that's exactly what's happening in the CRM, which is the logic that goes in on my head is how is all this triggering automation and so on and so forth. So these stages are very important. And I want to reference the deal or the specific deal stage names. So for anyone that's following along on that spreadsheet can reference that. And again, like, you can make this your own. You could change the stage names. You could do whatever you want. It's just a guide to work off of. With that, we'll wrap up with some of the scripts and templates that we talked about. So what you'll see as options to download here in our resource section would be the planning session summary template that we've talked about at length here in this episode. Again, that's an internal template that we use just to communicate with each other or ourselves and paste that into the notes. The pre-approval milestone. So the pre-approval milestone is an automated email that's going out when the client has been identified as a pre-approved client. That's an automated email that goes to the borrower and the realtor that they've been pre-approved and that their pre-approval certificate is going to come later. And then the pre-approval certificate is also something that we're going to share. That's the detailed pre-approval certificate. That's the semi-automated certificate that's completed in the CRM by the loan specialist. So those are the three big takeaways from this episode that we'll have in the resource section. Just to recap again, we've now touched on the lead consultation and intake process. We've touched on the document process and review stage, pre-review stage of the file, and then the review stage, review summary and strategy, which we talked on last episode. Wrapping up this episode, the planning and strategy session. Moving forward, we'll be jumping into a live deal and getting it to approved, and then we'll talk about the broker complete to funded, and that's where we'll wrap. Again, we are building a very robust resource center, or look at it as like a mini course that you'll be able to log into, watch everything. There's summary of all the notes that we have on every episode, a resource center to download all the pieces that we talk about in each episode. Every episode or lesson will have its own page and resources. So that is coming. That will be launched once we're done the full PLP series. It's a lot of great information there. So look forward to that. We'll officially wrap here with the listener interaction. The question that we actually had came up. This question comes up a lot, but it's actually very timely for this episode. Do you complete a rate hold for all your pre-approvals or just some? How do you decide?
The answer is definitely some. I mean, there are certain markets, you could say, that don't offer rate holds, such as, private. Most alternative lenders, B lenders, do not offer rate holds. So there's nothing you can do in that regard. Even with conventional lenders, as most would know, a lot of lenders, when they do rate holds, there's a premium on top of it. So it's kind of a tough thing for a client to understand. I think if a client qualifies, like in our industry, there's a handful of lenders that do true rate holds based on their current posted rates. I always think it's a good idea to get those in. And, in today's market, we have something called discretionary rates with certain lenders where, even if we send in a rate hold at whatever 5%, there's a good chance it's going to be lower once it's a live transaction. So I think having that conversation with clients is important. So no, you don't do rate holds for all clients because you can't in certain situations, but every opportunity that you can, I think it's a great practice. We never know. Obviously, in today's world, rates are trending down. We've been through a market where rates were constantly going up. So those rate holds are really important, right? It's almost something that secures the client in a rising rate environment, because if they go anywhere else later, they're probably looking at higher rates than what you have secured. So I think it's important to explain that and do them as much as you possibly can. And when the time comes, with certain lenders, just explain to the clients that there's always typically going to be opportunity for a lower rate once it's a live transaction that a lender can put more effort into, and they're seeing dollar signs at that point, right? Pre-approvals and rate holds, lenders know that there's more to that. It might never go live, and that's just the industry that we're in. Lenders don't put a lot of time and attention into these for the most part, so it falls back on the broker to really understand that pre-approval to the point of the planning session. That's why it's important to go through this in detail.
So with that, wrapping up, one thing I did want to touch on is we are going to get this series done. So our next 2 episodes will be focused on wrapping up the PLP. We have some really cool stuff in the works for future episodes with the Mortgage Broker podcast. One being the Behind the Broker series that we're going to be launching probably in October, November. We're already in the works of recording some episodes with very elite advisors, mortgage brokers in our industry, but primarily actually currently registered with a Better Way Mortgage Group. And these are the best of the best, the ones that are willing to share all of their tips, tools, and tactics. We're going to be touching on all that. These are going to be a little bit more condensed episodes, probably trying to keep them to 10, 15 minutes of just hot tips that you can take away and implement in your business. If you're listening to this and you want to be featured in one of these episodes, definitely reach out. This is in the works right now. We are recording these episodes right now. So if you're interested in participating, we'd love to highlight you. Just reach out to us. We'll get you on right away. And that's a wrap. So we'll hope you enjoyed this one, and on to the next one. Thank you for tuning in. If you found value in this show, please subscribe to our channel on your preferred platform. We're available on Spotify, Apple Podcasts, and YouTube. Your support is incredibly appreciated. We also welcome your reviews and feedback, which are crucial in helping us deliver outstanding educational content. Feel free to share your thoughts. A 5-star review would be fantastic if you think we earned it. Lastly, a vital announcement about Backpack Buddies, our chosen charity for 2024. This remarkable organization addresses a hidden hunger issue many are unaware of. In British Columbia, while school districts provide meals during school hours, numerous children face food scarcity at home, particularly during weekends. Backpack Buddy steps in to support these vulnerable children, ensuring they have easy to prepare, familiar food for weekends. This is achieved through collaborations with schools and an extensive distribution network. Your contribution can make a significant difference. With just $20, you can give a child in need a food bag from Backpack Buddies filled with enough meals and snacks to sustain them over the weekend and more. Once again, thank you for listening, and see you on the next one.